Good morning, trading world. It is August 10th, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. CPI day is here, and here is how I think it should all play out. First thing to notice is that we started with an expected move of about plus or minus 8.825 for the week. It's 2 days, or 2 days have passed, and today's expected move is still over half the weekly's expected move. This says we are going to have a heck of a range today, so big move alert. Second, we have a gap down on internals from yesterday that we did not cover, so there is still some upside risk coming into today. Technically, the weekly time frame is the chart in control, and based on that, there appears to still be room to go up. Even though I see room to go up on the weekly, it's not much, which means the room to go up could be filled by going sideways, being that we are in consolidation mode or rest area on that weekly time frame. I am still not letting go of that 418 to 421 level just yet. The CPI could be the boost or last gas effort to get up there. The daily chart is overbought, but isn't quite ready to fall out of bed just yet. Although it is headed down out of overbought territory, it has a rest area or consolidation zone to go through first. With the MACD still on the positive momentum and trend side, it's likely we have a last-ditch effort waiting to go back to the upside before a complete breakdown on the daily. Now, the 4-hour chart is next in rotation. And let me get to the 4-hour chart here. The 4-hour chart is next up in rotation and is at the lower part of its range, ready to cycle back up. And this is kind of that rest area or consolidation, and it's easier to see the 4-hour ready to cycle back up on a stochastic. Let's see. Now for the CPI numbers itself. I said earlier this week it would be hard for me to imagine CPI having good news or good numbers. However, for the numbers to be good, it need only be less than the 9.1% reading from the last CPI. No one ever seems to take into consideration the government's cheating by always moving the goalposts. We will get a CPI number, but it's not the real number because they are overlooking and taking certain things out of the latest calculations of CPI. Go back and look at revisions, and you'll see how they keep raising the numbers to be in line with the Fed speak. Earlier this week, I pointed out that momentum to the upside was fleeting. So imagine a water hose spewing water, and when you cut the water off, it doesn't immediately stop spewing water. It just kind of slows down. If you have the water hose pointed up, it slows down, and if you move the hose a little bit, it still could give you that last couple of good sprays before the water retreating back down in the hose. This is where we are on the weekly and daily chart, down to the last 1 or 2 good sprays of positive momentum left. With all of that, let's get into the key levels for today. Alright, here we are back with the key levels for today. Starting on the resistance side, we have our jack resistance at 412 to the 413 area. Then we have our queen resistance, 414 to the 415 area. And then king resistance, 416 to the 420 area. On the support side, we have our jack support at 411 to 410. Queen support 409 to the 408 area. And then king support 407 to the 403 area. The main thesis for today is bearish, closing below the 411.35 with a projected target low of between 411 and 406. The alternate thesis for today is bullish, closing above the 411.35 with a projected target high of between 414 and 420. The numbers were skewed to the bearish side on the thesis for today. However, whenever more traders are on one side and we get that opposite reaction will be super explosive. And that is what is setting up for today. A super explosive opposite or alternate thesis today. The current major channel we are in is 397 up to 416. And the next major channel is from 416 up to 425. Give me a moment to bring up the scenarios of the day. Alright, here we are with the first scenario. It is our trend day up. We open gap up and start with a fade back toward the previous close. Also notice that CPI is going to give us a nice bit of movement before we get to the cash open. So I expect to see a pop up and then kind of come back to earth, level out, and then give us that pull back toward the previous close. We found support on or before that previous close, then begin the uptrend for the morning, better known as our golden window, the best time to trade. We find our midday chop around either the possible queen or king resistance area. Also notice that the gap is large enough to make it feel like a downtrend has started, but until we cross the previous close, this is still an uptrend day. And that's going to be our trend day type, which is the most probable scenario of the day. However, as things get closer and that CPI number hits, it could adjust where we are. And that brings us to the second scenario. All right. Here we are with our second scenario, which is our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area and find our midday chop either around the queen or king resistance before spending the same energy we used going up to come back down the second half of the day. Also, we have a vice versa warning on this as well. Vice versa warning on this is we could actually start with an extreme up move at CPI down to kind of level out and continue lower at the cash open. If we continue lower at the cash open, We could find our midday chop around either the possible queen or king support area. And then we would finish the second half of the day with a move back up with about the same amount of forces we had coming down the first part of the day. So that is our rounded reversal day type structure and the vice versa warning for today. All right, our last scenario is our expanded range day structure. We could look to set a decision area, low boundary around the jack or queen support before reversing back up. What makes our range day or any range day type structure is the crossing and closing below and above the previous close. So that's what we want to look for. And if we do have our range day type structure, you're prone to follow things like your Bollinger Bands that will kind of give us more heads up as far as a directional change in conjunction with your indicators like the RSI or MACD or stochastic. But things like moving averages are almost useless on regular range days. So those are the scenarios for the day. I'm expecting an extremely explosive day. So again, your number one job as a trader is to first protect the capital that you already have. And we do this by knowing and understanding the risk that we have and taking each position and managing that accordingly. I hope this helps. As always, wishing you a positive trading day. Hope you have a great one.